Hi, Sean here from Mel's YouTube book site YouTube channel. Okay, so today we're going to be talking about the sales control account. Everything you need to know about the sales control account. Okay, let's get started. What is a general ledger? All right, a general ledger is where all the financial transactions of a business records are kept that affect a related group of item entries entered throughout the months and year. For example, inventory, stock, purchases, sales, suppliers, also known as accounts payable, customers, also known as accounts receivable, cash book, petty cash, assets such as a computer, cash register, etc., VAT or GST, and journals. Now, the reason we're doing a sales control account is we need to keep a record of all our customers. When they buy from us, we need to know how much they bought from us and how much they owe us. And in order to give them out invoices, we need to keep an accurate record of our sales in our business. Okay, so sales control account. Inventory is an asset, and assets are always on the debit side. However, sales is on the credit side because it decreased the owner's inventory stock that was sold to a customer and taken out of the storeroom, obviously. Okay. An invoice is given to a customer once the sale of the stock is made by the owner of the business, which includes the owner's cost and profit margin plus the VAT. Sale of goods is then recorded and entered in the general ledger on the credit side, including the owner's cost and profit margin, but excluding the VAT or GST, as known in some countries. All right, cool. Let's go so here's the invoice. These customers came and bought from us, Mr. Collins, Mr. Church, and Mr. Welsh, and we issued them out an invoice for the stuff they bought. So Mr. Collins bought 10 bells at $15 each. It's $150. He bought 20 pumps at $20 each. It's $400. He bought 15 saddles at $35 each. It's $525. $1,075 in total. The VAT, $161.25, comes to a nice total of $1,236.25. And so did Mr. Church buy stuff, and so did Mr. Welsh buy stuff, buy goods from us. Okay, so on the sales control account, we're going to enter those amounts that they bought from us on the credit side. So we're going to, Mr. Collins invoice, 10 bells at $15, there's the $150. 20 pumps at $20, there's the $400. 15 saddles at $35 is $525. Comes to a total of $1,075. All of this excluding VAT. Okay, remember that. In the sales control account, we don't put in the VAT. All right, Mr. Church did the same and Mr. Welsh did the same. We added up the grand total over here, $2,575 in total. Total customers' invoices, including profit, excluding VAT, was $2,575. Total $2,575 to put to the sales account in the trial balance at month end on the credit side. There we go. So this is all you need to know, okay, about the sales control account. It's important because we need to keep track of our customers and what they bought from us. And the amounts that they bought from us. Right. I hope that makes sense. I hope I'm doing justice to this. I'm trying to, help you understand how the sales control account works. And yeah, it's pretty simple. We've got a whole lot in our playlist that we've got. Bookkeeping 101. We're going to break down all the individual accounts in detail so that you can understand them in entirety as a component on its own. That's related to all the other components. All right, I hope this helped. My name's Sean. I'm from Mel's YouTube book site, YouTube channel. Please like this video, share it with everybody you know, and subscribe to our channel. We're going to be breaking down in detail all the various components of bookkeeping for you, so that's easy to understand. And leave any comments, suggestions. If you've got any questions, please ask. Sean from Mel's YouTube book site, YouTube channel. Good day on you.